Hey everybody, Boris for BK Forex. Welcome to the Calm Dollars for Feb 28 to March 3rd, 2017. Aussie dollar, dollar CAD, and Kiwi dollar. And I think the story in the Calm Dollars this week continues to be sort of the stealth rally, but it is a stealth rally that is clearly running into some very serious resistance, with one exception, dollar CAD. Dollar CAD to me is a very interesting potential trade to the downside. But Aussie, Kiwi, clearly starting to hit a little bit of a bump against some very, very key resistance, especially the Aussie trade, which has been very obvious resistance that we've seen on long-term charts. There's a lot of, not a lot, but a halfway decent data here on the Calm Dollar front. We have the GDP coming up out of Australia. I think the interesting thing about, by the way, the data out of Australia, or the testimony from Lowe on Friday, which was that basically there's zero chance the RBA is even considering any kind of easing, which means we're now clearly in a neutral to tightening mode versus neutral to easing mode we used to be in. And that, in a sense, should be a relatively positive undercurrent for the Aussie. Aussie has just been basically really also gathering huge amount of momentum as a default carry trade as U.S. yields continue to depreciate. So in many ways, I think the fate of the Aussie is less out of its hands and more in the U.S. hands this week. If the dollar doesn't strengthen, it's likely that the Aussie continue to do so. If it does, then there's probably more profit taking going on. Chinese data also kind of interesting. The CAC PMI certainly going to be interesting to watch, just to see the whole idea of the recovery in the Aussie has been the stabilization of China, and that's a big undercurrent under which I think it's going to either support or decline based upon the themes for the week. CAD is the big story because we have the BOC statement. Now, what's interesting is that just today we had some very hot inflation data, and that could be an interesting weight on the CAD, because CAD usually was a story of the Bank of Canada talking about possible easing. Now the question is whether Polis is actually going to mention the possibility of tightening. So you see, I think in many ways it's kind of interesting. You saw so many of the central bankers from the Calm Dollar land take on a much more dovish mantle just a couple of months ago, and a lot of that rhetoric is now turning back to a more neutral and even a more tightening posture as we go forward. So that'll be an interesting look, and that could certainly have a big effect on CAD as we go forward. Of course, no changes expected, but it's really much more a matter of guidance. And then the rest of the week, there's nothing on the Calm Dollar front. It's all going to be dollar driven. So it's going to be, well, the GDP out of Canada, yes, that'll be another interesting look. But aside from that, nothing on the major front on the Calm Dollar front. So it's really all going to be dollar driven. The levels pretty much remain at the same levels as last week. We have the 76, 77 in the Aussie, which is going to get tested probably. Again, volatility is super compressed here in all of them. 32 to 30. The 30 is, to me, the very interesting look in the dollar CAD. That's the one that I'm going to be following carefully. And Kiwi just kind of remaining really, really quiet at around the 71, 73. Let's take a look at the charts here and just see what they're showing us, starting with the Aussie first. So I think the most interesting tell on the Aussie side here is a pretty, well, on a relative basis, this is all very tight volatility. It's only 30, 40 points. But the fact that we ended on the day's lows, that we really kind of tapped out at the 77.25, and that this whole 77, 78, which we've been talking about forever, is a quadruple top major overhead resistance, could be a pretty decent sign that, yes, we're going to just start to curl over, that we're going to start to do the whole Aussie range thing. The support, near-term support, of course, comes in here at 76, and it's probably a pretty decent support. I don't think Aussie's going to just kind of die and roll over, because there's nothing so negative on that side, and there's nothing so positive on the dollar side to really want to make it trade this way. Ultimately, though, I think, if you're kind of bargain hunting, you buy 76. You buy down to 75, and if 75 gets broken, then clearly you're wrong. But I think this whole 76, 75, probably a very decent accumulation level, given the fact that we have a nice big uptrend, and that's probably going to be the corrective level from which you could certainly get at least a small pop. To the upside, a break above the 77. I was going to say 77.50, but you really do need a 78 tap to just give you a super bullish signal. A close on 78 puts 80 into view, and it completely sort of takes out all the stops in this overhead resistance. So that's going to be the big upside move here to the upside. But it looks to me like Aussie's going to be more of a bargain hunting trade this week, as it makes a little bit of a correction rather than a straight breakout to the upside. Now, dollar CAD, on the other hand, is a very interesting trade, precisely because it could be the breakdown trade today, this week. We've been capped at 32. We did probe the 30, 50 today on CPI, came back up. If BOC is far more hawkish than the market thinks it is, then certainly 30 comes into view. And a break at a 30 here, this is a very momentous level. A break at a 30 really does put us back into trade towards the 128. If you guys have been with me since the summer, I was a buyer of CAD all the way through the summer, and then come December, I started to be a seller of CAD. And that's actually been a very good strategy, although the sells and the volatility have just gotten so depressed at this point that it's sort of difficult to want to trade this in any meaningful fashion. But still, I think this 130 break here could be possible. A punt would be to just establish a position here with a stop above like 32.50, just to see if the run towards 130 establishes. This is a much more dangerous position because there's a chance to get squeezed, and of course Polis could really change his mind. There's also, by the way, and this is interesting when you're watching this, as sort of bearish as this looks for dollar CAD, it could very quickly turn bullish if we break above 32, because then you have a series of higher lows, a confirmed test at a 130, and then they'll move back up to 134. So I think with CAD, you do have to be very flexible here. Let the chart speak to you. Let the market tell you how it's feeling before you establish a position. And then last, Kiwi, marking time, not much on the charts. Where really, as you can see, it's really a 71-72 trade with nothing much going on. Incredibly low volatility here. Consolidated post the RBNZ correction at 73. I think the big story here is the break of the 71s. If we break 71s, then that turns into a series of failed highs and a potential move back down to 70. As long as we're kind of holding out over here, we could make a secondary run towards the 73s. What's interesting is that if we do make the run towards the 73s, that would be a complete market rejection of the RBNZ jawboning, and that would actually be very bullish for the currency. So we'll be watching all those things. It's really, with COM dollars more than with anywhere else, the charts really need to speak to you in order to make interesting trading decisions this week, because it's not much data, and it's really going to be price action that's going to be the primary driver of where the trade goes. Wish you guys the best luck, the best of trading. Boris, over and out.